What kind of situations then now, and you mentioned earlier the energy producers, and where are you seeing value, and what types of situations are you involved with now?
And what I've been saying, I'll say at least for a number of years, has been, I've disliked shale. I think this shale is just, as they talk about, a treadmill. And
Hmm.
my viewpoint has always been, I want to own companies that can generate free cash flow and actually can build their production base, but also can build the reserves. But mainly I want to see that cash flow, and I want to see free cash flow. I want to know, if I'm giving you my money and investing in the company, what am I getting in return from it? And in the past, mainly with shale, it's been more production, more debt. And for a short period of time, it equated to a higher share price. So you had a bunch of institutional capital chase shale, which I thought would ultimately implode. And today, with lower prices and no financing around, you're starting to see a number of shale situations implode. And we've been making money on situations like I mentioned, Jadestone Energy, which again, free cash flow, company with zero debt, cash on their balance sheet, which is looking to do exactly what you should be doing in today's environment, which is we're trying to buy depressed operating assets, acquire them, rationalize them, make them stronger, better, generate free cash, and do it again and again and again. And that's what you do in down cycles, is you want to be in that position with your balance sheet and with your management team where you could take advantage of distress. My view is I see myself as a distressed investor always. And I want to find situations that are mispriced, or at least that the company and the management team is so focused on delivering value for their shareholders. And those are the situations you want to be invested in, something like Jadestone. Other things we've mentioned, at least in the past, have been things like Vista Oil and Gas, which is a player in Argentina, which we think is slowly opening up, and we think there's potential growth there. And that's, totally different business model, but the focus is on growth. And again, they have a strong management team. And then there's a few other companies I won't mention today because we're involved in terms of doing research on, which, so one's, it's about a $400 million market cap. The other's about $1 billion. And those are unique too, because the goal for those companies, very short term, is to generate a lot of free cash flow. They're mainly more of a fixed gas type investment, even something Jadestone's focused on a bit, and fixed gas as a diversifier away from oil. And the goal there, again, of these other companies that we're involved in is to look to grow free cash flow and see a capital return or value to the equity holders. So those are the situations I would focus on, at least in the energy space. And again, our theme at Livermore remains, we feel that, all the Fed stimulus is going to create either inflation to potential stagflation, more that L shape, which would be stagflation, would be no growth, but yet prices are appreciating. And I think the things that are most scarce in the world today, which are things like, gold, which are things like, different commodities like copper and even oil to some degree, even though it looks like it's oversupplied today because of the demand issue. I think as that comes back and with less CapEx, the potential for crude is actually very strong.